Are you wondering when the economy is going to recover? Are we headed for another recession? Will the housing market look like it did in 2008? What about all these job losses? And more importantly, what do I do now? Well, that's exactly why I'm here, and I'm going to unpack it all right now. Hi, I'm Nick with the Iannitti Realty Group. Just wanted to cover a couple of quick things. Let's do a real quick April housing update here. Our sales price was up 6.5% year over year. That's great news. Our market time, we were only 9 days on the market, so things are still selling quickly. Our month's worth of inventory is still 1.7 months worth of inventory. But real quick, I broke down our active listings, new listings, pendings, and solds for the entire month of March, 31 days. And look at this. I thought this was pretty interesting. 162 listings a day, 120 new listings every day, 81 homes went pending every day, and 88 homes sold, okay? And when it was all said and done, for our sales volume, we were only down 1.4% year over year. That's actually really good news. So that just goes to show you that things are still moving. People still do need a place to live, even during the pandemic, and rates are still incredibly low. So real quick, economy going to recover, all these other things. Well, basically, when we look at our recovery here for our economy, essentially right now our economy has just really been put on pause, right? Someone's just pushed pause. I kind of like this analogy. When you look at 2008, what happened in the housing market was kind of like a tornado, and everything was just wiped out and we had to rebuild everything, right? This is more like a snowstorm, right? We're buried in snow here, but we just need to wait for it to stop snowing and the snow to melt, and all the housing and everything is still going to be there. We're going to get back up and running real quick. And what I thought was really interesting here is Goldman Sachs, JP Morgan, and Morgan Stanley are all saying the same thing. We're going to see a V type of recovery, right? So they already know that this quarter here, Q2, is going to be a loss, but then once we get to Q3, we're going to start a rapid recovery going into the end of the year. Okay. When you look at historically, basically pandemics have always usually generated a V-shaped recession. We've seen that time and time again. Okay, it's definitely, when we look at other things like SARS and H3N2 and H2N2, all of them have had a V-shaped recovery. So we can assume basically this is really not going to be any different. Okay, so are we going into a recession? I'd already say we are in a recession. Remember, recession is just 2 consecutive quarters where we don't have positive growth in GDP. The first quarter, we're going to miss it due to the month of March. The second quarter is obviously going to be a loss. So we're probably in a recession right now. However, remember, done so many videos on this, recession does not equal housing crisis, okay? With the exception of 2 recessions, the Great Recession in 07 and 09, and the Gulf War recession, where we lost home values, all other recessions going all the way back to 1975, we actually had positive appreciation in the housing market, right? What this basically proves is that recessions and home values are not directly correlated to one another, okay? So is this going to be like 2008? No, I don't think it's going to be. We have completely different underlying market, right? Yes, there are still people who remember the Great Recession, and basically, they're wondering, is this going to be the same thing? It's not, for a lot of different reasons, okay? First and foremost, when you look at the annual home appreciation going into the crash of 2008, numbers were super inflated. When we look at what's been going on the last 6 months here, it's much more normal than what we want to see, okay? Remember, it's much more difficult nowadays to get a mortgage, right? The higher the spike is, the easier it is to get the mortgage. So we've been done a much better job of who's actually getting money, and the people who are getting mortgages actually have the ability to afford them, okay? Our months of inventory today is only 3.1 months worth of inventory. That definitely works into the supply and demand equation. I did this slide in my last video. When you look at, back in 2008, we pulled 824 billion out of the housing market. This time around, we've only pulled about 232 billion out of the housing market. So what that means is 53.8% of homes in America right now have at least 50% equity. 37% of them are owned free and clear of mortgage. That is absolutely huge, right? Because in 2008, when the going got tough, people just bailed and they gave their homes back to the bank, right? Walked away. And that's not going to happen this time around. People have too much to lose with all the equity that they have in their home. Okay, so what about all these job loss, right? Well, when you look at the U.S. Post, this is basically from the U.S. Labor Department. We've never seen anything like this in the past 2 weeks. These unemployment claims. Okay, there's a super big spike, and we expect them to come back down. Also, this is from again, basically looking at the first wave of unemployment. Right, this is the first 700,000 people to apply. Now realize we had a wave of 3 million and then 10 million after that. We won't get those updated numbers until May 8th, and I'll bring those to you. But obviously, in the first wave of people looking for unemployment, the vast sector was in the food service business, almost 60% of them. When you look at all of these other segments, though, these are all segments that can all basically get back to work relatively quickly. So about 90% of the people filing for unemployment should be able to get back to work rather quickly, okay? Again, we're looking for this V-shaped recovery. That's the same thing in jobs, okay? When we're looking at Goldman Sachs, the unemployment rate, they're projecting 15% this year. They're probably the most conservative. That was the highest number I could find. But when you look at this slide, unemployment rates are not directly correlated to home sales, okay? It's just not the case. We saw big gains in unemployment at times where we saw the housing market unaffected. We saw reductions in unemployment rates, and that has not swayed the market either. So they're not necessarily directly correlated to one another. Again, too, when you look at this 15% rate, people talk about, oh God, we headed for the next, depression like in the 1930s. If you look back, this 6 years of the depression, 4 out of the 6 years they had unemployment over 20%, right? We're not even close to that in our projections that are going to be going on. So we're not headed for the next depression. Okay, so what should you do right now? Well, basically, home ownership is still an important source of wealth creation, and it enables current homeowners and succeeding generations to move up the economic ladder, right? So what I would tell you is do not panic. We're going to get past this, okay? It's funny because Ben Bernanke said his results do suggest that in the absence of panic, the declines in the employment, consumption, and output in the early stages of the Great Recession would have been significantly less severe, okay? So what do you need to do right now? Don't freak out. We are going to get past this. If you need to buy or sell a home, we have strategies to deal with the virus. We have brand new protocols to keep you safe, and it is possible. We're doing it every single day. If you have questions about what your home is worth, what's going on in your neighborhood, I'm more than happy to have that conversation. Just reach out. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters, and now more than ever, who you choose to get your housing information from also absolutely matters. Thanks so much and stay safe.